how Europe will read. Will it be conciliatory in the coming days is the question we have to answer. And we have perhaps the best guest to answer that. Willem Buiter, Global Chief Economist at Citi, joins us all the way from New York. Good evening to you, sir. Thank you once again for staying up for us. What's your sense?
Well, good morning to you.
Morning. Is it you were confident on when we spoke to you late last week that Brexit doesn't really exist as an option? What's your take now? Will Europe be conciliatory?
Well, it certainly always existed as an option. I did not think it was the most likely outcome when I last spoke to you about a week ago. The outcome of the referendum, the overwhelming no vote in response to the latest official proposal of the European plus IMF institutions to Greece, has raised the risk of a disastrous outcome materially. I still think there are many ways in which the Greek dilemma could play out, but definitely the rejection of anything that has been offered by the international creditors and the sense of triumphalism that we've shown them democracy has overruled finance. I think if that really takes hold, it would be very dangerous, because Greece, even if it were given what it asks for, which is generous debt forgiveness, needs massive additional financing, which I cannot see forthcoming from the international community, the international creditors, in the absence of any solid track record of delivering on commitments to reform. I think at the moment things are very, very precariously poised. The sense of euphoria in Greece will last maybe a day, and after that the reality of bank closures, inability to withdraw deposits from banks, inability to go to the ATM and get cash out, that will take over.
Mr. Buiter, good morning and thank you for joining us. That's about Greece and the impact there, but how high is the probability of a systemic global risk in your mind in the event of a potential Brexit?
I mean, Brexit itself, the immediate financial consequences are manageable by the European central banks and the instruments it has at its disposal, everything from outright monetary transactions, quantitative easing, routine or enlarged funding of banks who collateralized repurchase operations, the whole range of lender of last resort operations to the banks, and sort of through the back door lender of last resort operations to sovereigns in the periphery. All that will make sure that no sovereign or no systemically important financial institution will be forced into unwarranted insolvency, even if Greece were to go completely wrong. But clearly, a dysfunctional outcome of the Greek crisis, in which there is further sovereign debt default in Greece, first to other official creditors, then perhaps to private creditors, and ultimately perhaps leading to Brexit, would do financial damage, even if it wouldn't be something like a financial catastrophe. I personally consider what's going on in China from a global perspective rather more important than what's going on in Greece. But Greece can ruin the European recovery if we do not get a settlement that provides debt relief to Greece in exchange for serious structural reforms by Greece that permit it to resume growth in a way that will ultimately eliminate its dependence on the rest of the Eurozone for funding. We're nowhere near there yet, and this referendum is in many ways a big step backwards.
Okay. Sir, just one last question. The IMF on Friday put out a note indicating the gravity of the situation, saying that, even if they got a 20-year moratorium and 40 years to repay, it looks like, they're going to keep paying till 2057. And more importantly, even if you assume the 1% GDP growth, even then, that is the long-term Greek growth, which is not there for the last 5 years, Greece would still be running a debt to GDP over 100% for the next 3 decades. Considering the mammoth problem, and also the first voices that have come from both Hollande and Merkel in particular have been conciliatory. They have just said that we will respect the referendum, and they are meeting on Tuesday. Does this give you the sense that there is conciliation, or does it give you the sense there is more chaos?
Well, clearly, nobody wants a disastrous outcome here. Mr. Tsipras, the Prime Minister of Greece, was conciliatory relative to his previous statements in his post-referendum public statements. So were Mrs. Merkel and François Hollande, the French President. But this is not enough. The fundamental positions of Germany, a number of other countries among the creditors, the Netherlands, Finland, Estonia, and even some of the other periphery countries that have done the hard work and do not want Greece to get a reward for, in some sense, not doing the reforms that they, at some cost to themselves, did implement. Spain, Portugal, Ireland, Italy. These countries are definitely not willing to make, I think, the kind of concessions on debt restructuring, basically writing off most of the Greek sovereign debt held by official creditors, writing it off. They're not ready for that. At the same time, Greece has proven itself singularly incapable of instituting the kind of structural reforms that will stimulate growth. Labor market reforms, product market reforms, privatization, opening up the service sectors, opening up the professions, all the almost emerging market features that make Greece almost an anomaly in the European Union. They're unwilling or unable to reform these. So both sides have something going for them. They are willing to talk again, but unless the creditors make deep concessions on debt write-downs, and Greece, for the first time in its history, makes serious reforms, this will not end well.
Right. Just one final comment from your end then, because all the viewers watching our show today are most concerned about what the impact could be on distant economies like India. In that sense, India has bolstered its own defenses with high amount of forex reserves to manage any kind of meltdown. So do you think that India will be quite insulated from this entire Greek episode?
I definitely think that given the extremely professional management of monetary policy in India, given the more than adequate management of fiscal policy, and given the response of the Indian authorities to the near accident in June 2013, when there was a hint of the end of dollar quantitative easing, I think India will be very little affected by the global fallout of the Greek crisis. clearly, if Europe, as a result of this crisis, goes to a slowdown, then ultimately through trade channels, India will be affected. But the direct and disastrous financial market transmission, resulting in sharp depreciation of the rupee, a spike in rupee interest rates, collapse of the stock market, none of that seems likely, given, I think, the record of management since the near crisis in the middle of 2013.
Well, I guess if the monetary authorities are listening, and my sense is at this moment they will all be tuned to CNBC, this should be a very big feather in their cap coming from you, Dr. Buiter. Thank you very much for joining us this evening.
Thank you.
All right, that's credentials coming from a fellow central banker, so that will be well respected. But certainly, Buiter's raising the fears of a Brexit now. It is making the situation more messy.